How to read financial statements like a pro. If you ever looked at a company's financial statement and thought, what in the world is all this stuff? You are not alone. But here's the truth. If you want to trade like a fundamental investor, you must understand how to read these numbers. Today, I'm going to walk you through the 3 core financial statements every trader should know and show you how to spot opportunities, red flags, and hidden gems inside them. Before we dive in, here's where we are going. By the end of the video, you will know how to identify whether a company is financially healthy or not, spot growth potential using real financial data, and make smarter, risk-managed trade decisions, not just guesswork. Let's start with the first statement. The income statement, your profit snapshot. Think of this like the company's report card. It tells you how much money the company made and spent over a period of time. Here's the rhythm. Revenue, what they earned. Cost of goods sold, what it cost them to make that money. Gross profit, revenue minus costs. Operating expenses, salaries, rent, marketing. Operating income, what's left after operations. Net income, final profit after taxes and interest. What to watch as a trader? Consistent revenue growth over quarters or years? Improving profit margins. Is the company becoming more efficient? Spikes in expenses could signal future trouble or investment in growth. Now let's take a conflict example. Imagine revenue is growing, but net income is shrinking. That's a flag. Why? Because they are making more money but keeping less. Something's off. Dig deeper. Now the next statement. The balance sheet, what the company owns versus owes. This is a snapshot of the company's financial health at one point in time. Sections, assets, liabilities, and equity. What they own, cash, buildings, inventory, what they owe, loans, payables, equity. What's left for shareholders after debts. Here's a rhythm you want. Assets, then liabilities. That tells you the company can handle tough times. Key matrix that you need to check. Sure, that's current assets divided by current liabilities. If it's below 1, it's a warning sign. They might not cover the short-term debts. Debt to equity ratio. High debt could mean risk or opportunity if growing is strong. Don't just look at the numbers. Look at the trend. If debt is rising fast but revenue isn't, they may be borrowing just to stay afloat. If assets are climbing and debt is stable, now that's a strong play. The next statement, the cash flow statement, the real money tracker. Here's the twist most beginners miss. Profits is not equal to cash. A company can show profits on paper and still be bleeding cash. This statement tells you what's actually flowing in and out of the business. There are 3 types of cash flows that you need to keep an eye on. Everyday business cash, most important. Investing, buying or selling assets or investments. Financing, loans, share, issuance, dividend payments. What should we look for? Positive operating cash flow. They are making real money. Negative investing cash flow. They are reinvesting in growth. Controlled financing cash flow. Not relying too much on loans. Now what's a conflict to watch for? If net income is positive, but operating cash flow is negative, something's fishy. They may be manipulating earnings or struggling behind the scenes. Now let's put it all together. The trader's edge. How great traders use this. Can trends across all 3 statements, not just one. Find matrix like low debt plus high cash flow equals to strong fundamentals. They look at valuation matrix next, like P/E ratio to decide if it's worth the price. Use these statements like tools in a toolbox, not in isolation, but together to form the full picture. Because financial statements don't just tell you what a company is, they tell you where it is going. Now that you know how to read the income statement, balance sheet, and cash flow statement, you are already way ahead of most beginner traders. Don't just follow the hype, follow the data. If you found this helpful, hit that like button, subscribe, and let me know in the comments what statement you struggle with the most. I might break it down in a future video. Because smart trading starts with a smart understanding. And now you have got the edge.